Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. And today I'm very excited. It's been a while since I've got this excited about an investment opportunity. I've had this one in the files for a few weeks. I haven't obviously published it until now. Today I'm going to be doing a stock analysis and overview on Gold Royalty Corporation. Please, if you like what I put out here, subscribe to the channel and hit the notification bell. It really helps with the algorithms. And it costs you absolutely nothing. So I've been able to put my finger on several multi-bagger opportunities since I started recording my thoughts in 2021. You can go back and you can look at those. And so please, if you do get some value out of it, be sure to like and subscribe for the overview. And if you want the detailed breakdown into the trades I'm making around this company, how I'm positioning, and a really in-depth valuation, make sure you subscribe to the Substack, which will be in the description. So enough of that disclaimer. Nothing I say is advice. It's me putting my opinions out there to the world. You guys know that. And a double reminder, for the love of God, please subscribe. Okay. Also going to be giving an overview on the eToro portfolio. People have been asking me, do I still have that? Yes, it's still out there. Anyone is welcome to copy that. I'll talk about that at the end, performance and the position weightings. Okay, so I'll do a little bit of an update there. But Gold Royalty Co., I'm going to explain today why I think I'm looking at the next Franco-Nevada here. I really do think there's that potential. The business model is precious metal and copper royalty company. They have a diverse portfolio of over 200 royalties already, and they IPO'd, I think, 3 years ago or less. The acquisition of the royalties and streams is their business model, so they acquire these royalties and streams. This allows them to get the exposure to the potential upside in the inflationary thesis without the direct operating involvement. This is an asymmetric inflation beneficiary. It's a capital light project. The investment case. So Gold Royalty is a small cap company, capital light inflation beneficiary, which is a theme I've been banging on about for a long time now, with the potential to compound into a multi-bagger over multiple cycles. So this is not just a one and done cyclical play like probably offshore oil will be. This is a company that you can hold through the up periods and through the down periods and allow yourself to enjoy that compounding over time, I believe. And that is due to the business model. They boast over 100% year-on-year revenue growth since IPO, albeit very recent. It's trading at less than 0.5 consensus NAV. And I believe, as I said, I'm looking at the next Franco-Nevada potentially. Positive free cash flow is imminent already. If not this year, will be next year. I think it can do about 28, maybe 30 million in EBITDA in 2026. 20x EV to EBITDA multiple implies a double in less than 2 years. And if you're looking even at a reversion to NAV, you're looking at a 1 times NAV, you're looking at a healthy upside. One-page overview as of today. So the stock has sold off a lot, which is why I really like it. I'm getting an opportunity here, I believe, to buy it at a very good price. Look at the EBITDA growth rate at 243.6%. Yes, I know it's recent, but this is not a tech company. This is better than a tech company. And I'll tell you why, because inflation won't hurt this company. It will be a beneficiary of that inflation. And you can run this thing with 6 employees, I believe they have on hand. EV to EBITDA multiples, we'll leave that for now. I'll go into it in more depth. But I mean, the price to the book value of this sort of thing, 0.4, when albeit the industry leaders are trading at 3x, I think that there's a strong case to be made. Who owns it? Gold Mining and Barrick are strategic partners in a lot of what they do. They have a significant chunk of the ownership. Revenue in blue, EBITDA in black, free cash flow in green. As you can see from the standing start here on the left, they've been able to get this thing really cranking. So over 20 million, I think they'll do closer to 28, 30 million by next year for a 280 million enterprise value company. The beauty of this royalty structure is, as my Uncle Rick would say, your gross is your net. So they really don't have a lot of, well, they don't have any CapEx, and their OpEx is very minimal. All they do is run their key staff and then go out and buy up these royalties and streams. And so you can see free cash flow imminent coming into 2025. And I think the market's all of a sudden going to realize that this is where the growth opportunity is. In addition to lots of cash. Free cash flow Cash from ops, CapEx, and net income normalized. Okay. That's just what you're looking at here. And as you see, the inflection point coming next year. So you've got a bit of vision about you can look into the end of 2025 and start to think about what this company may be able to achieve. So they've recycled some of their cash from operations already is positive, but they will pay off any liabilities. Obviously, if they found an attractive royalty, they would put to buy, they would put that to work. It's down 18% in terms of the price action on the year. I think it's a great opportunity. Jurisdictionally sound. So this is taken from a presentation that was done by the CEO, Peter Benke, I believe his name is. Hopefully I pronounced that correctly, at Uncle Rick's conference that was over the last week. So I've been rewatching the tape and taking some notes. He makes a very good point. Really, royalty companies own contracts, which is the beautiful thing, but it's also the potentially dangerous thing. So you want to make sure those contracts have enforceability. So they've been signed into agreements and they operate under good jurisdiction. So if you look over to the right here, these are the cash flowing assets. Okay, these are the things that are already in production. They've got royalties and streams on all these things. Most of these are tier one assets. So you've got all Canadian or all North American, let's say. You've got Borborema in Brazil. Obviously, that's not a jurisdiction that is looking particularly friendly at the moment. And the Veris mine, which is in Bosnia. Bosnia seems to be fairly welcoming to Adriatic Metals, who operate that Varus mine. Everything seems to be, más o menos going pretty well as far as Bosnia is concerned. And what I love about this thing is that they have the royalty in the stream claim on 100% of the copper that's in that polymetallic deposit. So everyone's talking about the silver that's coming out of that for good reasons, very valuable. But I mean, the copper there, I think this is finally, I've found the way that I want to play copper. These are all the other projects that they have in the pipeline, from development, advanced X, and then exploration slash wildcatting. And they're almost all of them in tier one jurisdictions, as you can see. So this is the wrong way to think about it. So this is not how I'm thinking about it, but I know people enjoy the back of the envelopes because they're simple. 2025, what do I think that they can do? Break it down to a per share basis. So fully diluted, I think the EBITDA per share would work out to be maybe 9, maybe 10 cents. Free cash flow will be somewhere there, given the business model. What valuations do royalty companies normally sell for? Well, there's two different ways to think about this. The large caps, they're currently going for 25, 30x, and you can argue the pluses and the minus around that. That's really Wheaton and Franco. I own both of them in addition. But where's the growth in this industry in the royalty? You think about the size of a Wheaton, the size of a Franco. I think there's good upside there to higher volume, higher gold prices, higher surprises, let's call it, in the exploration of their mines. So people are willing to bid a certain amount for them. These guys are growing at triple digit year on year. I mean, the small caps should, by rights, if we get into a rip-roaring bull market for the metals, which I think we're just starting to wake up to now, these things should trade even more than in terms of the multiple than the large caps, because they have the ability to grow at higher rates. And this is the same conversation that I had with Josh Young, which is recorded in one of our chats. You can see it on the channel, where I was sort of thinking the larger caps would receive more benefits in terms of investor sentiment because of their liquidity and their economies of scale. However, the smaller caps are what can really grow and drive the IRR. So I think it's a similar situation, but this is a royalty company. I mean, we're talking about companies here that can maintain 70, 80, 90% free cash flow margin, 100% gross operating margins in some cases. So I'm super sold on this thing. Hopefully it works out. Okay, so if you look at the NAV, there's 100% roughly in a reversion to the multiple to NAV, okay, or slightly over the NAV or book value. If you look at a 25x or a 4% free cash flow yield, you're looking at $2.50 for the stock if the free cash flow comes in at that level. If you look at a 5% EV to EBITDA yield, which is a wonky metric, you're looking at $1.80. You simply average the two, there's $2.15. So somewhere in there, in the near term, I think there's a decent chance for a re-rate. However, that is not how I'm looking at this thing. Why? Because look at the compounding thing that this can achieve. Up the top here, I've taken a screenshot from looking at the filings, and I've highlighted revenue and the EBITDA since inception. I've cut off analyst estimates after I believe 2025. You can see 200% revenue growth, the EBITDA changing, coming into an inflection point now where I think the market's really going to wake up. 15, I think there'll be closer to 18 million in EBITDA. So you're still looking at less than 20 times the forward EBITDA, given the enterprise value of the company today. The cash flows here um, signify two things. Obviously, the company's ability to grow, but also uh, the nuance and the smarts of management in terms of being able to allocate capital to increasing the gold equivalent ounces, as you can see over to the right. So this is more what I'm thinking. So this is a reliable, predictable business model. And so I feel much more comfortable being able to extrapolate that out very simply over a 10-year period. I believe that the average life of mine is somewhere around 18 years, and I think there'll be extensions and positive surprises to the upside. So some of those 18 years of production might turn into 28 years, into 38 years. I don't know. But I do know that Gold Royalty will earn back my investment very quickly, and they'll have access to all the upside of eventual extensions of the mine without having to pay a cent in terms of enjoying the revenues from future production. So if we use the EBITDA and the free cash flow estimates, they're going to be more or less the same given the royalty model of the business. I've assigned a base scenario, a bull scenario, and a bear scenario, and a probability for each. These are the shares outstanding. The growth rates 20 and 15% year on year over the next 10 years. Obviously, I don't think it can grow at 100% year on year or 200% forever. I think that's a base effect. But Kirkland Lake for 10 years or more, when I last looked at the stock before the merger, they did 48, 50% growth year on year in EBITDA for more than 10 years. And that's an operator. So there's a case to be made that my growth rates here are a little conservative. Terminal multiples are, as you can see here, I think in a very pessimistic 14x for a business of this kind, when I think that the broad market has traded around the sort of 16 historically. Yes, it's a small cap, so maybe you give it a discount there, but it's not any old small cap. It's a reliable, growing free cash flow machine with a highly reliable margin. Gold prices fall for whatever reason for a period of 6 to 18 months, who knows, that their cash flow will still be okay. They've only got 6 employees to feed, very low overhead. They can weather out the storm. So enough said on that. Somewhere around $3.70, I think, if you discount today, is what I could value this stock with a straight face using these assumptions. Obviously, feel free to agree. If I use a 20% discount rate to figure out if I really want to get a 20% IRR, $1.70. So still, again, well above where the stock's currently trading. And so, yeah, I'm definitely looking to add more and more to my position on any weakness. This is one of their projects. I think it's the one everyone's excited about, the Verus project. And if you look at where is it? The copper grades here, indicated and inferred. Whether it's a low or a high grade is not really the point. These guys have access to all, they get first pick of 100% of whatever that number is, even if it's a small number. And they get access to 30% of the spot copper price. So we're heading into a copper bull market. Think about the ability to buy this thing at 30 with an inbuilt 70% margin. You can buy it and sell it at the spot market. Yeah, 18 years on most recent guidance. I think that there's a lot more to this story, but we'll see. Don't need 18 years really to make the investment back when you look at what they've paid for these individual royalties. So it's long and multi-bagger potential. It's got the liquidity. It's got a solid management with a creative track record, albeit a new company. Some risk, 5% potentially, only because it's a small cap, potentially 7.5% if we really saw a steep sell-off and blood in the streets. And that's it. I hope you enjoy it, guys. I will now head over to Crassus. So this is the type of volatility that you can expect in this particular portfolio. It's a deep value portfolio mixed with these high quality, high margin inflation beneficiaries. The beauty of this in terms of gold royalty is that it's both. It's deep value, it's growth, it's a compounder, high margin quality business, you name it. But you will, I almost guarantee you will see drawdowns, big up months, drawdowns, big up months, and so on and so forth. We're currently up 8.13% on the year, 37% last year we did. And so I think it's about 25, 26% rolling 2 years. If you look at what's in the portfolio, hopefully this works. Here we go. Currently at 33 positions, which is quite a lot for me. Valaris, Warrior are the big ones there. Wheaton, as you can see, a very, in my opinion, easy 30% rise from when I first started entering into the stock. Transocean is a long-term multi-bagger story. And I'm looking to get gold royalty to 5%, maybe even 7.5% as of time of recording. Obviously, things can change. It's not advice. It's just what I'm looking to do and encapsulate my thoughts as a kind of a thought diary moving out from here. Take care, guys. I hope you're all doing very well. Please do like, subscribe, and send me a comment. And if you are interested in my thoughts, but in more depth, check out the link in the Substack. Take care.